Hey, good morning, everybody, and welcome to Daily Market Report brought to you by Mike Bjork. And today is Thursday, September 22nd. Wow, we had a crazy day yesterday afternoon after the Fed speak. So let's go jump right into it. We got a bunch of stuff to go over today, so we'll kind of jump right into it. The economic news release, we'll start off with the jobless claims. The previous last week we got a reading of 432,000. We're figuring to drop it down a little bit for about 424. It came in slightly under, so a little bit better, but far from where we need. We need to be well under, close to about 300,000 mark per week, unfortunately. Next item note would be the leading indicators. We had a 0.5% previous month, and we figured it would drop down a little bit, and it dropped some, so kind of in between. So a little bit better than what we expected, but still we need leading indicators to be a little bit higher, so that way we have a little bit more output, hopefully more manufacturing and such, more business. FHFA home prices, we had 0.7% previous month. And with those existing home sales, it actually jumped upwards. So that also helped us out. So some decent news on the FHFA home prices. We had an increase in home prices. Leading indicators weren't as bad as what we needed to be. And jobless claims, of course, wasn't so good. So let's kind of jump over here to the headline news. And this is what's really kind of driving the markets today. We have, of course, if you haven't looked at it yet, the stock market's way down today, over 300 just for the Dow alone. The Fed statements yesterday definitely rolled the markets. Basically, we're stating that uh, jobs and economic outlook looks very bleak for a while. So that's why they made that statement, basically that rates will remain low and until 2013, midway 2013, they're going to hold basically the Fed funds rate until then, at least until then, see where things go. And then on top of it, they basically approved what we had talked about before was the Operation Twist, which means they're going to sell short term and buy long term to keep the interest rates low. So we'll touch base on that, see how that looks on the bond market and how where we're at with things, where to be cautious of and stuff. But how that bleaked out was that bleak outlook kind of gave us looks like a pretty scary outlook here with the Grim Reaper here. So Ben Bernanke looks almost looked a little like him yesterday, huh? So let's go ahead and take a look here at the next item. Note is basically there's a big lot of still concerns about the European debts. And also China showing some contraction on their manufacturing, which they've been raising their rates to slow things down a bit because inflation was becoming too much of an issue for them. So all that coupled. So let's go ahead and take a look at what's going on with the bond market, where interest rates are at. All right, so we see how we've been kind of going semi sideways pattern for a pretty long time here, and we had a huge breakout here. We went through the 102 mark and right up above 103. We even had a huge opening gap here today. We had we're down slightly, but again, this is where we're at. These are pretty much unprecedented levels right now for the 3.5 coupon. We're at extremely high rates, or I mean high levels, which means interest rates have dropped that much lower. So interest rates are much lower than they were yesterday even, and depending on when people did the repricing yesterday, they may put it into today's pricing. So let's take a look here. I want to show you some last time we were at kind of these higher range. This is where we were at last year. We were at a very good range last year, and we still never even touched this mark here. We weren't even in the 102 range. We were just touching the 102 range here last year. And as soon as they announced a QE2, remember how this just dropped right around November. It just started dropping, 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 dropping. Now, obviously, we know that Congress is talking about some type of stimulation, and if they do announce something, that could easily happen, and this will at least correct itself. They do have a tendency to crest because it is in an overbought position. We don't know exactly when that's going to take place. It could be today, could be later this week, could be next week, could be a month from now. But at some point, it will correct itself. And if you're looking to buy a home, if you're looking to refinance, now's the time to jump into it and not try to get greedy. You definitely want to go ahead and try to get locked in now to lock in your fantastic rates. Again, these are fantastic right here. All right, folks, you guys have a wonderful day, and we will catch you tomorrow. There is no economic news releases, so tomorrow will be short and sweet. And you guys have a great day.